Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hello everyone, looking at PCLN NVDA TSLA NFLX CMG daily weekly time frames on a wild day that was controlled by the bears. So PCLN did end up being a bear flag, unable to get over exponential resistance, breaking 1800 support and closing at the low of the day on increased bear volume. So a bear flag is when you have a weak bounce attempt after a dump and then continuation to the downside. So support from here, if we lose the 50-day, which momentum indicates is more likely than not, there's a gap down here at 1766. That's a target to be keeping an eye on, especially with the way momentum is heading and the weakness in the market. So PCLN on the weekly time frame, to keep everything in perspective, we can pull all the way back down, and if we form a higher low compared to 1738, the bulls remain in full control of this very, very strong uptrend. So we can pull back another $55 and still be extremely strong. So keep that in mind. Bears are in full control of the daily time frame. Bulls are in full control of the weekly time frame. It might be a little bit of a tough concept to grasp, but that's the way it is. So we'll be watching for a bullish reversal candlestick on the daily, but not wanting to fight this trend. Don't try and catch this falling knife. We need to see signals on the hourly time frame that the bulls are showing up. NVDA, nice heads up that we had a bearish reversal hanging man yesterday being confirmed in a big way. I know some bulls were getting out because of that bearish reversal candlestick, and now we're closing near the low of the day, and we pull back huge because of how significantly we have run. That being said, we have tons of wiggle room to keep the bulls in control here. Next support is 125.78. Then I would look at 121.82. And I'm looking at supports from previous lows and resistances from previous highs to get those levels. Weekly time frame, bearish reversal candlestick, we can pull all the way back. Anything above 95 keeps the bulls in control. So obviously that's not even in the picture right now for NVDA. Bulls are going to be buying this dip in this semiconductor sector. This earnings reaction let us know that everybody wants in. Wall Street wants into this semiconductor space. This dip is going to be bought, but do not try and catch this falling knife. Same thing. Hourly time frame has to give us some indication that the bulls are showing up. We could drop another 5% pretty easily, but there will be a nice entry opportunity to be had here. Tesla on the daily time frame, after our double top, the bulls need to be very cautious. After breaking 312.53, the next support was down at 305.82, and the hourly RSI was not oversold when we broke that support. So we had $7 of downside. That was our target, and we hit it. Didn't expect to hit it today, but we certainly did. And we closed near the low of the day. So $300 is support, and 290.76 is the must-hold level to keep the bulls in play here with this all-time high. If we break that level, we have a double top and a lower low. We made a bear break of the inside bar on the weekly time frame, but again, we can pull all the way back. This is the support that must hold, 242. We could pull back $50 and still be in an uptrend on Tesla, looking just fine. So because of the huge moves we've seen in these names, they have so much wiggle room in the longer-term trend that the bulls, the long-term bulls, are not worried at all. There's a gap here on the weekly, 282. Keep an eye on that level as well. That's a potential target if this downside momentum continues. Netflix was saying that it would be one of the lead bears if the tech sector started to consolidate, because we were consolidating when the tech sector was still hitting new all-time highs. Well, here we go. We had a bearish reversal candlestick confirmed with a close at the low of the day showing momentum, gap down, further follow through, close at the low of the day showing further momentum. So support is 150.94, 148.90. I'm looking at the low of these red days where the bulls bought the dip. And we lost the middle Bollinger Band, high bear volume on the weekly time frame. Anything above 138.66 keeps the bulls in full control. We can drop down $14 and still have that be the case. So the middle Bollinger Band on the weekly will be a key support in the 144 range, and we'll see how much downside the market's going to give us here. Correlations between all these names in the S&P 500 pick up substantially when we see this kind of volatility and volume in the market. So the weekly time frame for Netflix, bearish reversal candlestick, but the bull's still in full control. CMG, still a fine-looking daily chart. Bearish reversal doji confirmed, close at the lows, but anything above 465 keeps the daily uptrend intact. So CMG has a stronger daily uptrend than a lot of these names, whereas Tesla has broken the higher low by breaking that support there. CMG still has all kinds of support at 465. Break 465, and that's a bit of a heads up to the bulls that this pullback is going to be more substantial. Weekly time frame still struggling at the 100-week moving average resistance now, 3 of the past 4 weeks. Upper Bollinger Band weekly resistance rejecting the price 3 weeks in a row. And it does look like we're consolidating and going to pull back. If we break 465, further downside is coming. That will be substantial. If it holds, the bulls remain in full control of this trend. So short term, bears in full control, lots of momentum to the downside, potential gap downs coming again tomorrow. And weekly time frame, bulls looking just fine. Semiconductor sector looking to buy that dip, but being very patient. I appreciate you watching. We'll check back in tomorrow once the dust settles a bit more. See you then.